Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermuelen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, do you think we're going to be hitting new market highs again this week?
Yeah, there's a good chance of the equities market pushing to new highs. I mean, last week we saw a pretty good little stock market sell-off start to take place. We had some big selling volume, and there was a lot of fear in the market. We saw the VIX spike. We saw the put-call ratio spike, which is traders buying put options, which allows them to hedge or profit from a falling market. We saw that jump up, so everyone was afraid and buying protection. And we saw panic selling on the NYSE, meaning majority of the shares were being sold, and that means there's panic selling among the average investor because the NYSE is known as the big board. It's got the big brand name stocks that the average Joe buys and sells when they're feeling good or feeling nervous. So we saw that last week, and usually when we see a spike in fear, it cleanses the market and resets it for yet another leg higher. So, you know, the market hasn't broke to new highs yet. It's trying to find some traction this week to see if there's follow-through from Friday's strong payroll numbers and that big pop in the stock market value. We'll see if we get traction by the end of the week. It's going to be really critical, though, if the S&P 500, if it breaks to new highs, then I think we're off to the races for a holiday rally. I think we could see this continue to grind higher, but it has to break out to new highs. And at this point, it's struggling, and if it rolls over, I think we could go down for a much deeper correction before we go into a end of December, potentially oversold rally. So we're in this kind of hurry up and wait mode here where we're just waiting to see if the S&P 500 is going to break to new highs. And if it does, then you got to be long equities because the trend is up. It just, cleansed itself with a correction. But if it starts to roll over here, the safe havens could have a really nice move to the upside going into the end of the year. So volume's light this week so far. Traders are waiting to see if there's big buying going to step back in and drive the markets to new highs, create a breakout, or if the sellers are going to step back in, and that's where we are. We're just waiting to see where the big volume is going to take the market next, up or down.
We'll have more with Chris Vermuelen right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Chris Vermuelen. Chris, were you expecting a downturn last week and then some good positive news in the U.S. change things?
Yeah, we were. I mean, we were actually expecting a top. We actually got into an inverse position, meaning an inverse ETF that'll rise as the market falls on Thursday, because actually the market momentum had rolled over last Thursday to the downside, and the market was on the verge of a pretty strong leg to the downside. We saw big money before that. As that was happening, we saw big money shuffling into the risk-off assets. And, more or less we saw the utilities starting to outperform. We saw bonds outperforming. Money was moving out of the high-yield bonds. They were moving out of the wood sector. And these are all things that we can gauge the market of where all the big money is moving their money, whether they're going into the risk-on, which are equities, or into the risk-off, which are the safe havens. And that's what we saw last week. And everyone was moving into the risk-off. But Friday's news, the very next day, when just as the market had given us a sell signal, some news trumped the trend, and we saw it take off to the upside. And so now we're just trying to see if that downward bias is just going to come back and pull the market back down and continue this correction, this deeper correction that we think the market should do. But again, you can't fight the market at this point. It's holding up. And, we just got to see how it's going to go. Now, the big move that happened on Friday was a huge gap higher in the equities prices, and it happened on news, and the price gapped up to the all-time high level. So it's usually when we see big gaps in the market, especially when they're on news, we usually see that price fade back down and fill the price gap. So we could still see the market sell off or trade sideways for a bit and pull back before it goes higher. But at this point, it's just kind of a waiting to see if we're going to break to new highs or if we're going to break down from Friday's reversal or this topping pattern that it could be forming.
And that good news was 266,000 new jobs added in the U.S.
Yeah, which was huge blowout numbers. It was really strong. It's definitely caused that huge excitement in the market.
We'll have more with Chris Vermuelen right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermuelen. Chris, what do you expect to happen with bonds right now?
The bond market's been trading very similar to the precious metals. They're both seen as a safe haven play, and they've had a very strong rally earlier this year, and now they've been kind of flagging out, trading sideways low to slightly lower in a bull flag formation since August. And really the pattern overall is extremely strong. Both gold and bonds are primed and ready for another leg to the upside, and it could be a big rally. But I think we're going to see those both hold their ground, continue to trade potentially sideways until we see the equities market roll over and put in a more significant correction. We keep seeing the S&P 500 and the indexes rally and have a small pullback, and each of these pullbacks are smaller and smaller, and eventually we're going to have another big correction. So until that happens, bonds, metals are in this formation that they're primed and ready to go. In fact, you look at gold miners like the GDX or GDXJ, and you look at even bonds, they're starting over the last couple of weeks to make higher highs and higher lows. And so that's the start of a potential new uptrend. So the money is slowly shifting into those safe havens, but until the equity market rolls over and investors start to get a much more a larger sense of fear and they need to go somewhere longer term, we're not going to see those really take off. But I feel like January is going to be a big year, for a big month for some big market moves going forward. And I don't know if we're going to get any huge moves going into the year end. I think the market could grind around and the S&P 500 higher. Bonds might drift sideways along with metals. So that's kind of what I'm expecting over the next 2 weeks or so going into the year end of trading.
We'll have a a look here at crude right now. What do you think it's going to do?
Well, crude's been having some pretty volatile price action. It's rallied back up, and I think last time we talked, I was mentioning that 59 and 60 is going to be a fairly significant resistance area on the chart. And we've seen crude rally back up. It's been trading at 59, almost tagged 60 2 days ago. It's at an upper trend line resistance area, and it's on the verge here, I think, of pulling back. Every time it's got to this upper trend line, as it's been channeling its way higher, we've seen a big bout of selling step in, and that's where I think we're at. We're at resistance. We're at this horizontal $60 per barrel area where we've seen big selling step in the past, back in June, July, and September. And I think it's just a matter of time before we see the big sellers step back in and drive price back down. They unload their positions. So short term, I am bearish on crude, looking for a pullback down to the $56 per barrel area. But overall, it is still channeling and trending higher. So at this point, pullbacks can still be bought, but I don't see a lot of upside potential. Really, the last month and a half, it's only trading higher by about $1.50. So there's been a ton of price action for a very little amount of gain. It's a pretty ugly looking chart in terms of trying to time the trade. So I'm not too excited about trading it. But if it starts to form a bearish formation, I think it's got a lot of downside potential to $51 per barrel. If that level breaks, then we're looking at $44 per barrel. So the downside to me looks really good, but we need to see this uptrend start to trade sideways and give us a topping formation for us to play a breakdown.
Is it a different story for natural gas?
Yeah, in fact, it's a completely opposite story for natural gas. We've been seeing natural gas form a really significant type of pattern that we've seen happen twice in the past. We saw it in August, and back in October as well. We traded both of these big rallies that we saw to the upside. And really 2 days ago, natural gas looks like it has put in a significant low, and it's in the kind of halfway through the stage of trying to form a bottoming formation. And we've seen this happen twice before. We traded them both. And what we need to see from here is natural gas to rally up to the, $233 or $233 area, potentially form a bull flag of some sort, or a bottoming pattern, chart pattern, and then from there we'll be looking to get long for a breakout in a rally. So it's really the exact opposite of what crude is setting up for. And natural gas to me has got a lot of upside potential. I think we could see it go from where it is now at $2.26 all the way up to $3. So there's a really big potential run. And the timing as well, we're going into January, February, we're going to be very cold part of the year. And we tend to see a winter rally in natural gas. So pattern, seasonality-wise, things are starting to come together for another play in natural gas.
Do you have an outlook for Bitcoin?
Yeah, taking a look at the Bitcoin chart, we can see that, it's amazing. Some big money keeps coming in. The market just pops, and then it can just drop very quickly. Now, overall, it is in a downtrend. It actually has a downward bias potential here to go down all the way to about the 6,000, actually more about the $5,500, $5,600 mark. It's on the verge of breaking down today. It's got a very big bear flag from the November high. And at this point, Bitcoin was really close to putting in a nice bottoming formation back in October, and it failed to extend the rally. Instead, it continued to just unwind and sell off, and now it's in a full-fledged, more or less, bear market again. And it's a very ugly chart. $5,500, $5,600 per coin is where the next kind of downward thrust could take the price action. So it's a pretty steep drop. Considering price is $7,200 right now, we're looking at a decent correction that would bring us back down to the April highs that we saw when it broke out into a bull market.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermuelen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.